Hi, my name is Jean Beckman with Real Estate Help Center. Today I'd like to talk with y'all about a loan. What is a loan modification? A loan modification is different from refinancing. Refinancing entails replacing your loan with a new mortgage, whereas a loan modification changes the terms of your existing loan. How do they work? Getting a mortgage loan modification could mean extending the length of your term, lowering your interest rate, or changing from an adjustable rate mortgage to a fixed rate loan. Though the terms of your modification are up to the lender, the outcome is lower, more affordable monthly payments. Foreclosure is a costly process for lenders. Many are willing to consider a loan modification in order to avoid one. Who qualifies? Not everyone struggling to make a mortgage payment can qualify for a loan modification. In general, homeowners must either be delinquent or facing imminent default, meaning they're not delinquent yet, but there's a high probability that they will be. Reasons for imminent default include the loss of a job, loss of a spouse, a disability, or an illness that has affected your ability to repay your mortgage on a timely basis. One potential downside to a loan modification. It may be added to your credit report and could negatively impact your credit score. The resulting credit dip won't be nearly as negative as a foreclosure, but could affect your ability to qualify for other loans. If your modification is temporary, you'll likely need to return to the original terms of your mortgage and repay the amount that was deferred before you can qualify for a new purchase or refinance a loan. After permanent modifications, lenders may want to see a record of 12 to 24 months of on-time payments to determine your ability to repay a new loan. Be aware, depending on how your loan is modified, your mortgage term could be extended, meaning it will take longer to pay off your loan and will cost you more in interest. But for homeowners on the brink of a foreclosure and losing their homes, the benefits of a loan modification far outweigh the potential credit risk and extra interest. Now what? First, you have to make sure you understand everything that your mortgage servicer wants from you and to fill out all the forms properly. Read all the instructions, collect and submit all the documents that they request. If something is not clear or you just don't understand it, contact them and ask. Improperly completed forms and missing documentation are two of the major reasons lenders cite for loan modifications being denied. If they receive your application on their desk and it's halfway filled out, they'll toss it aside. They're not going to call you and ask you to resubmit it. So when you do it first time, do it right. Some advice. Be accurate. One common mistake people make is either misstating their income or being too optimistic in predicting earnings. The lender will investigate you thoroughly before giving final approval, and if you haven't been upfront about your income, they'll be sure to find out. You can get in trouble for both understating your income to make your need for a loan modification seem greater and overstating it to make it appear that you'll be able to keep up with payments. You may be able to reapply or modify your application if your reported and actual income do not match up, but many mortgage servicers will simply deny your application. A good tip, calculate a new monthly budget and cut unnecessary expenses to the bone. Lenders will be less likely to approve your application if they think you're not serious about eliminating non-essential spending. At the same time, don't go overboard and exaggerate how much you can realistically cut cost. This can lead your lender to assume you've got more disposable income than you really have available. So with all of this that I've told you, there's a lot of things for you to consider and to know if you even qualify. You have to currently have a job as well. Do you need some help to avoid potential hazards? Call us at no cost to you. We are here to help. Thank you.